Welcome back, traders. Coach Carver here. In last week's video, we went ahead and we talked about the difference between retail traders and smart money traders or institutional traders, right? And, I want to go ahead. I want to dig a little bit deeper into that, guys. I just want to say it has been an absolutely amazing trading week for us here. I went ahead and called out over 250 pips to my free signals chat, guys. I'll go ahead and I'll include the link to that below. You guys go ahead and see results like this. Absolutely powerful stuff. Killer week for us here. But guys, I want to jump into this video. I really want to break down some of these basics of institutional trading, talk about things like supply and demand, go over some liquidity, some imbalances, stuff like that, right? So definitely tune in, stick through the whole video, guys. Absolutely amazing information. Make sure you go ahead and smash that like button, go ahead and subscribe to this channel, turn on notifications so you can get notified when we drop more videos like this, and I'll see you guys on the other side. All right, ladies and gentlemen, here we are on tradingview.com. I currently have Euro USD pulled up, which is the European and the United States dollar. I have it on the 4-hour time frame, which means each and every single one of these candlesticks represents 4 hours of price action. So I've had a lot of people reach out to me and say, hey, they wanted to see a little bit more institutional trading, maybe some reasons why I take these trades. And I wanted to go ahead and I want to pull up one of my favorite pairs, Euro USD. It's a slower moving pair, but when you guys think about it, the foreign exchange market moves approximately $6.7 trillion a day, and Euro USD accounts for approximately 30% of that. So it's one of the most heavily traded pairs and one of the simplest pairs for beginners to go ahead and get started with. So I want to make this video here today on Euro USD and go ahead and kind of break all this down for you, right? So first up, I kind of want to talk about supply and demand, right? So I have a couple of levels marked out here on the chart, highlighted in these white zones, and these are essentially levels of supply and demand. The ones that we see up top are levels of supply where it's a surplus of sellers, and you can see where price typically sells off from this area. And then the ones that you see down here on the bottom are areas of demand, right? So we have one here, and this is a surplus of buyers. And we went ahead and we've essentially been able to identify, some of these swing points and even refine them a little bit, right? So the way I break this thing down, here you have a area of supply. You can see price kind of like started working its way down. It got to this point, and this is where the sellers really took control. I went ahead and highlighted the previous bullish candle before it, really selling off. So our previous up candle here, highlighted in yellow, I went ahead and highlighted that, drew my supply zone all the way across, and went ahead and identified that there. And then so this point, we've seen price sell up, come down, create a lower low, price pushed up, created a lower high, and then it came down, created another lower low, and from here came up, created a lower high. And it was at this point price came down, created a lower low. But then in this area of demand, this is essentially where we found our floor, where we had a surplus of buyers, where they pushed price all the way up, broke our structure here, came up into this little area of supply. You can see just refined it down a little bit to this little area here, price pushed down, created a higher low as well. And it was at this point where this demand level was able to push up, break structure again, and go ahead and start this little ranging motion. Now, one thing I really want to be able to stress, and so you guys know how to really confirm that an area is a level of supply or demand, is when price is able to break structure, when it's able to go through and create a new high or a new low, right? From this level of supply, price was able to push down, create a new lower low, which then came up, created a lower high, right? So these same concepts when we're going up, right? We want to see a created low and then price go ahead and break our previous structure to create a high. That right there gives me confirmation that this is a strong level of demand. Same thing here. Price came down, created another higher low, another institutional candle where it pushed price up and broke another high, broke high here, and it broke our high here. And it was at that point where it started to do its ranging. Now you see, guys, I have these lines here with the money above and below, and essentially what this is doing is it's identifying levels of liquidity, right? So in my previous video, we talked about institutional versus retail traders, or smart money traders versus retail traders. And the retail trader is taught that the more times that a level is hit of support and resistance, the stronger it is. And institutional traders are taught that fresh, untested levels of supply and demand are much stronger, right? And every time that you see a retail trader go through and place sells at resistance and buys at support, what it's essentially doing is it's creating what we call liquidity. Now this is where, you know, they're taught 15, 20 pips away from their entry. They would have a stop loss. So up in here, we have a bunch of liquidity. And what we understand is the banks are going to want to be able to go ahead and grab that liquidity. The banks are typically getting in when the retail traders are getting stopped out, just like we have a level of liquidity right here. Price came down, stopped out the buyers, went ahead and created our level of demand and pushed up and stopped out the sellers. It was at this point it went through a little distribution phase, and then it went ahead and sold off and stopped out our buyers. Now, one could go ahead and state like, hey, look, this is a little, you know, demand zone as well, but I wouldn't necessarily count that because there's too much liquidity being created right here. So when I look for my levels of demand and my levels of supply, I want to see where the manipulation will happen, because I understand that smart money traders are getting into the trade after being stopped out. So you can see we had price push all the way down, stopped out our buyers, came down right into our nice little zone here. It tapped into it 1, 2, 3 times before going up and grabbing all of this liquidity here. It grabbed this imbalance right there as well. Remember, I talked about imbalances before. They're essentially areas where there was unfair buying pressure. You may hear them referred to as fair value gaps right there. It's a big gap in the market essentially. So when I took this trade, I put my take profit up to this level of supply because I understood that we have liquidity here that it needs to go ahead and it needs to mitigate. It has an imbalance here that we need to mitigate as well. Plus, we have a bunch of liquidity resting above here where people had sold off, and there's a bunch of stop losses up here that need to be mitigated. So I had my take profit here, 96.1 pips, guys, absolutely powerful trade. That's a 1 to 7.57 with a 12.7 pip stop loss. That's pretty tight, guys. You're able to use some nice clean risk management there. You're able to have a little bit of a larger lot size by having a nice risk to reward. So it was at this point here, I went ahead, had price come up into my level of supply. I go ahead and wait for that additional confirmation that, you know, price is slowing down, it's getting ready to reverse. Give me those kind of cues. That way I know that I'm not really risking my account. And even though when I am, my stop losses are tight, guys. You can see on this other trade, 12 pips. This thing went ahead and it grabbed that take profit fairly quickly, right? And the reason why I put my take profit down to this demand zone is because I knew there was all of this liquidity right here. And I knew that eventually this was going to go ahead and have to get tapped into. So essentially, guys, the way I broke it down, I knew that we had a major imbalance here. Let me go ahead and even zoom in and I'll show you guys through the replay mode. That way, kind of clean all this up, the levels that I'm looking at, right? So if you guys take a look at this, a really good example of an imbalance would be something like this, where we grab the previous wick here, come up to this wick, right? This is a really good example of an imbalance, and this is essentially what you would see, right? Just a bunch of buying pressure, no selling pressure whatsoever. It was an unfair advantage. There was a big fair value gap right here. So I knew that price was going to go ahead and it's going to have to at least clear this, not to mention we have a little one right here as well. So now I have the imbalances there, so I know that price is going to at least push down to here, and that's where I went ahead and I took some partials, right? I took some partials here, moved my stop loss well into profit, and then you're able to see, you know, look, we have a bunch of liquidity just waiting to be grabbed right here. We still have to stop out the buyers on our previous trade, so that's where we're going to see price continue to push past down, and it's typically going to go to an area like this, right? So as you continue to play this out, you guys can see how this had happened, right? Boom, went ahead and mitigated this imbalance. Now we just need to clear this one as well. There we go. Went ahead, completely gapped this imbalance and took out all of this liquidity, just completely swept that liquidity within 1 4-hour candle, guys. And then you see price starting to reverse here once it tapped into that level of demand. And I mean, guys, just off of that alone, having a buy trade set up here, you're already 34 pips into profit. I did not take this buy trade just because I had met my trading plan goals for the week, guys. So, you know, I had already had that set up and went ahead and decided not to take any more trades. But, you know, taking a look at something like that, you know, here before it go ahead and taps back into this level of demand, I mean, that move alone, it had you had just set a trade there right at that demand zone. That's a 72 pip move, guys. Absolutely powerful. You could have easily done something like this. Put in a nice buy limit there, right? With a pretty clean stop loss, I would put it right to the bottom of that demand. And look at that. You could have had a 1 to 3.87 risk to reward with a 17.9 pip stop loss and a 69.2 pip take profit, right? So definitely powerful stuff, guys. You can start to understand the power of understanding supply and demand, understanding the manipulation behind the market, how the banks really like to sweep that liquidity. You can see a perfect example here where it stopped out all the buyers. And you can see another perfect example how it stopped out all the sellers. And then went ahead and completely mitigated those imbalances, came back down and even stopped out this series of buyers as well. Got another example over here where it stopped out all of these sellers, people looking to just completely sell off from here. So you guys, when you're able to come in here and you spot this stuff, this is what's going to be what really helps you out. I talk about a lot of stuff like this within my free signals chat, guys. And again, you know, like I said in the beginning, we're up over 250 pips this week just in our free signals chat, guys. Free value for you guys. I'm going to go ahead and include the link in the comments below. I'm going to go ahead and pin the comments. It'll also be in the description. Feel free to reach out if you guys have any questions, guys. Absolutely powerful stuff. Hopefully this video was able to help you out. Go ahead and drop a comment below. Again, smash that subscribe button. Go ahead and turn on notifications so that way you can get notified when we drop more value like this. I hope this was able to help out, guys. Hopefully I was able to impact you in your trading career here today. I appreciate your time, and I'll see you guys on this next one.